Hello and welcome to the Crypto Club and Digital Assets weekly catch-up on Zoom. It is Sunday, the 8th of September 2024, and as is always the case, never quite know what we're going to end up talking about. Most weeks we talk about blockchains, DeFi, NFTs, ICOs, CBDCs, digital currencies, digital assets, lots of other things, really, including the metaverse and any other developments that are happening. Some weeks we invite people on board to do a Gone in 3 minutes pitch, which is where they spend 180 seconds talking about their project or initiative or interest. No slides, no PowerPoints, just straightforward talking, like a 3-minute elevator pitch. Hope you enjoy this session. Do click on the link below. Come and join us for a future event. We hold them every Sunday evening, as I say, 7 p.m. till 8 p.m. UK time. So with that, let's see who's going to come and join us today. Hey, Alexander. So you're just connecting there? And Cecil
Hello.
as well?
Hello.
And JT's joined us as well. He's keen. Hey.
Hey,
So Alexander, love the backdrop. Whereabouts are you based then, Alex?
I'm based in between Moscow and Istanbul for some reason. Yes. And the thing is that I'm contemplating now moving somewhere else, and we're going to probably establish a company in Dubai, and precisely for this project. And but we haven't decided finally, so it depends.
Okay. Yeah. And Cecil, are you part of the team as well, or are you completely different?
Completely different. I got this link from Eric from the Digital Commonwealth,
Oh, excellent. Great. Okay. Now, where are you based then, Cecil?
London.
But you say you sort of link with Digital Commonwealth, which is great. James's group.
Yeah.
He's built up a great following. And Alexander, I think you found out about this through Jeremy, was it?
Yes, precisely. And I learned about Jeremy because of Tom, so it's kind of was my approach.
Yeah. Yeah. It's a small world,
Yes.
blockchain and crypto, and you
Mm-hmm.
find there are many groups
Mm-hmm.
who kind of interact with each other. But I love the community because everyone's so keen to learn from each other and share with each other and get ideas and that kind of thing. I've been involved in this area since probably 2014, 2015, I think it is. Got really active in it in 2016. And I used to go to all of the events that were going on in London. I used to describe myself as a crypto meetup groupie because there was so much going on at one stage. And it kind of settled down, but it seems to be picking up again. And as you mentioned, the likes of Dubai seems to be really growing as like a crypto hub, and that the Gulf states seem to be really taking to heart crypto and blockchain as an
Yes.
area of great opportunity. So
Mm-hmm.
it's been interesting to see. I think was it Abu Dhabi who's announced some latest regulation around tokenization, I think the other day.
They've got
Um,
a number of special, they call it free zones, and
mhm.
there are a number of zones who are offering kind of special conditions for blockchain-based businesses.
Okay.
It's not as easy as it might seem because they are quite strict in terms of kind of delivering respective licenses.
Hmm.
And first of all, we are going to get a developer license and kind of start with this. And this developer license will allow the company to keep kind of, first of all, intellectual property like code, patents, etc., trademark, whatever. And after that, we will contemplate probably registration of another company entity that would hold the token business itself.
So it's been interesting the way there are these kind of like enterprise zones and that, because I seem to remember a number of years ago, Belarus was trying to move into that with Minsk was trying to declare itself like a crypto free zone, not a free of crypto
So to
zone.
some
Like,
extent, yes, I would agree, but again, it's risky. It's risky because there are lots of people I know from Minsk who are doing some crypto stuff, and there are lots of developers there. But
mhm.
still, it's risky, and it's not appropriate for building a kind of reasonably established business in crypto because it's now and then you might expect some sort of problem.
Yeah. And it's interesting as well. Last week on the session that we did last week, we were talking about Estonia and the e-registry passport scheme and how they were facilitating things as well to encourage business and development, particularly around Tallinn University. So yeah, it's fascinating to see how different countries are taking the initiative here. And it's kind of a shame being in the UK. The UK doesn't seem to be grasping this as a concept and seems to be determinedly that the governments are saying they're in favor of crypto, whilst the regulator is determinedly preventing innovation, shall we say, or constraining it. So we'll see where it goes. We've been joined by Jeremy as well. So good evening, Jeremy.
Yes. Hello, everybody. Hello. Sorry, camera off. I'm in a exotic location. But great to tune in, Gary. Thank you for the updates.
Fantastic. Jeremy, where are you actually generally based? Is it actually in Cambridge then, or is it London?
Yeah, Cambridge. A bit of traveling next week, but yeah, it's Cambridge, and then business is global, Gary. So Hong Kong, Singapore, California, Dubai, basically. I think just reinforcing your points, by the way, Gary, it's predominantly export. So it's tech business, crypto price forecasting, crypto funds, but yeah, it's UK based, but predominantly export. So just, okay. I can hear you, Gary. I fully agree, by the way, with UK just not. I was being recorded. Okay, I'll be nice. Okay, yes.
Exactly. I think that the regulators are trying to do their best to fulfill their primary goal, which is to prevent systemic failure and to protect citizens, they say.
Well, okay.
Yeah, I'll switch the recording off at some point when we want to talk about that. Okay, from that.
Okay. Thank you, Gary. Yes.
Alexander, then, given that we have about 5 people, 4 or 5 on, we may get a few more joining. Are you at the point where you'd like to give us your whirlwind tour about your project? Well, what we'll do is I came up with this idea a little while ago, which I call Gone in 3 minutes. So it's kind of based on trying to remember the star who was in it now. And Gone in 60 seconds is about stealing cars. But I introduced the Gone in 3 minutes idea, which is a 3-minute pitch where you get to talk about your project. Don't start saying to me, can I share my screen or anything like that? Because the answer is no for now. But you get 3 minutes to talk about your project. And then after that, we can ask questions. And then if we want to share screens or anything, we'll see where we go from there. But I've got a little timer here. So whenever you're ready, you have got 3 minutes starting from now.
I'm ready.
Go for it.
Okay, I'm representing Junior Labs, and Junior Labs presents its innovative Bitcoin hedging product, Shortbit, the only hedging product that we claim offering scalable and passive hedging free of liquidation risk. It's constructed as a fully compatible ERC20 token with built-in AMM, automated market making. It means that Shortbit is fully decentralized and it prices and trades itself, and it's purely a synthetic token with advanced math under the hood. If you are a retail investor, you can hedge your Bitcoin holding by just buying an equal measured in USD stake of Shortbit, and you can go for a vacation for a week or month or year because Shortbit is free of liquidation risk. And secondly, it generates impermanent gain whenever Bitcoin price deviates from your entry price. And if you are an institutional investor, you will appreciate definitely zero slippage pricing of AMM with very low volatility-based spreads and extreme sustainability of the instrument. Shortbit easily survives 1,000,000 times Bitcoin price jumps. If you're a market maker, you will discover that the fundamental delay between actual Bitcoin price, observed Bitcoin price, and its reflection in Shortbit through price oracle, somewhere up to 30 seconds, establishes a perfect arbitrage opportunity to enjoy you about 15,000% per annum return under normal Bitcoin volatility. And finally, yes, Shortbit offers attractive staking program We believe that short bid will have a tremendous impact on crypto hedging practices, and it will grow to become a global DeFi instrument. And of course, I invite everybody to participate in pre-production test of the instrument, especially if you are somehow involved in crypto market making. That's it.
I was going to say you've got 1 minute left. I was just looking at the counter there, so that was very, very slick indeed. But very good. Fantastic. In that case, I'm going to just ask a quick couple of questions to begin with, and then we can open it up. So if I understand correctly, what you're saying then is that Shortbit is an ERC20 based token, so sitting on the Ethereum blockchain, that allows exposure in some way to Bitcoin. Is that right?
Right, precisely. This is synthetic token with inverse pricing to Bitcoin.
Okay. So who would you say is the target audience for that? Is it consumer or commercial?
In my pitch, I mentioned kind of 3 types of people who might be interested. First, it's kind of retail investor, just general investor, whatever. You're just keeping just 1 Bitcoin or 2 Bitcoins, and for some reason you would like to hedge, and you would buy short bid to hedge your position with 0 delta. But you can construct your delta as you wish in respective kind of combination of Bitcoin, kind of long position, and short bid as a short position, and it's up to you to decide. And the beautiful thing about short bid hedging is that you will get, again, for example, if you've got just 1 Bitcoin, let's say 60,000 value, US dollars value, you would buy for 60,000 short bid, and you would get a portfolio with 0 delta. And the beautiful thing about this hedge is that you will get an impermanent gain. You probably know what means impermanent loss in terms of Uniswap, right? Whenever Bitcoin underlying price deviates from your entry price, you are incurring a loss, impermanent loss. Whenever the price goes back to the original entry point, your loss is gone, and you're kind of better off now. The same thing, but inversely. In terms not a loss but gain is applicable to short bid. And the thing is that there is just very simple math behind this, because the function x plus 1 divided by x has a local and global minimum at x equal 1, which is 2. 1 plus 1 divided by 1 equals 2. And whenever and x is representing kind of the ratio between actual right now price of Bitcoin and the price that you entered at into the portfolio. And for example, if we've got, say, Bitcoin price 60 plus 60,000 short bid value, and for example, Bitcoin goes up by 50%, 1.5 times. So we've got 90,000 value of Bitcoin now, and we divide the value of short bid by the same 1.5, and we get 40. And 90 plus 40 is 130, which creates 10,000 premium against 120 value of your initial value of your portfolio. That's it. So, so in terms of if you're a retail investor, you've got passive hedge with impermanent gain. If you're an institutional investor, you might be sure that short bid will withstand essentially any jump in Bitcoin price first. And you might be sure that the price of Bitcoin short bid, at which you can buy it from short bid itself, because the short bid is smart enough to sell itself, and it knows at which price to sell itself, and you can buy or sell this short bid with some spread. at zero slippage price. So there is no slippage. There are some limits in terms of a single deal that you can make with the contract, but the number of such deals is not limited. You can buy billions or hundreds of billions of these tokens or multi-billions. The thing is that, yes, at every step, the size of the deal might be limited, but the number of deals is not limited at all, and it's perfectly scalable and with zero slippage. And thirdly, if you're a market maker, then again, I would emphasize that the market making is short bid is profitable. Why? Because it has fundamental delay between actual Bitcoin price and price that it will be realized in short bid in 30 seconds. So if you are smart enough and you are doing market making in short bid and Bitcoin, you will have tremendous 30 seconds for your decision to make a decision whether you would like to buy or sell short bid, because in 30 seconds, according to public, of course, all the contracts will be publicly available and all the kind of, and just because this instrument is fully decentralized, you will perfectly be capable to predict the price of short bid in 30 seconds, and you can act respectively. You can either sell short bid or buy it, sell with a profit.
So if I kind of paraphrase that into, it's effectively an algorithmic hedge instrument.
Right.
Would that be a fair way of describing it? Yeah. Okay.
The thing is that, as you probably noted, I never ever use the word collateral. There are no collateral structure in this product.
And I guess the other thing is, with it being an ERC20 token, does that mean it's traded on exchanges, or it will be traded on exchanges, or are you doing it as a pure private play?
It can be traded anywhere. It can be wrapped anywhere. It can be put as a collateral. It enjoys all the kind of features that ERC20 standard offers. But the thing is that, taking into account that the token itself has built-in, so to say, Uniswap inside it. So Shortbit itself can sell the token for a list of authorized assets, for example, for Ethereum, for, say, Matic, Solana, etc., etc. So it means that, yes, you can use probably other decentralized exchanges to trade this token, but the thing is that you probably will somehow lose against this built-in facility. But if we are speaking about centralized exchange, there is no conflict here, because, again, as if you are a market maker, you can extract additional value between this decentralized built-in facility and centralized exchange. And this is precisely what I'm speaking about when I'm insisting that market makers will be able to make profit from this arbitrage opportunity between between decentralized built-in AMM and centralized exchanges.
So my one last question, then I'll hand it over to anyone else who wants to ask us. Is do you have a website that people can take a look at?
We're about to finalize. We're going. Our technology is based on Chainlink price feeds, and we're going to apply for some program with Chainlink, and we're about to finalize site, and yeah. Okay. So it will be available just in a few days.
Okay, I guess for anyone who's listening, and particularly because we have people listening around the world, so the name of the project or the name of the token, just want to repeat that, spell it out for anyone who wants to repeat it again.
There are three words, kind of key words. Junior Labs is developer firm. Shortbit is a product, is a token, and UniHedge is the platform where Shortbit will be traded.
Excellent. Nice and succinct. I like that. Really to the point. Thank you. And Jeremy's given you a thumbs up on that as well. Nice one.
I'm looking forward, but when it's more available, Alex, just share it, whatever, on the WhatsApp groups. Actually, I'm definitely interested in it. So very interesting. Thank you.
Yeah, and we don't do any sales pitches on here or promote things or anything, but always good to listen to projects and that. And you'll find that there are people who are at different levels and that, which is why I was interested as to who this is kind of aimed at. So it's for those who are active in the kind of like the trading community, whether, as you say, whether it's market makers or commercial or privates. That's really interesting. I'll open it up then, Cecil or JT or Jeremy for that matter. Any questions that spring to mind on that? We've got Snowfall joined us as well. Hello, Snowfall. Whoever Snowfall is.
Hello.
Hey, can just about hear you there.
Yeah, I'm sitting in my garden right now, so Wi-Fi is not all that.
That's okay. We can hear you. You don't need to shout or anything. Whereabouts you based, Snowfall?
UK?
Oh, okay, right. So it's probably, is it raining where you are at the moment then?
No, a beautiful summer's evening.
Okay, lovely. You must be in the eye of the storm that's hitting the UK then. Excellent.
Yeah.
Cool. Well, welcome aboard. We've just been listening to Alexander. He's been talking about his project and product, which is from, as he says, from Janir. It's called Shortbit. And I described it as an algorithmic based hedge instrument, really. So an Ethereum ERC20 based token. I don't know, Snowfall, what's your area of interest? What brings you along today?
Curiosity, but we all know that killed the cat. So I'm just listening. I was gonna say silently. So effectively, Shortbit allows you to short Bitcoin, right?
Yes, it's an instrument that is aiming to establish first ever highly liquid token with a negative correlation to Bitcoin.
So I mean, I can already short Bitcoin using CFDs. So how does this differ apart from I have a token?
From EFTs, what's the difference?
CFDs.
So contracts for difference.
Oh, yeah. Do you mean some on-chain contracts?
Yeah. I mean, I can short stocks. I can short a lot of crypto if they're represented in CFDs today on certain platforms. So how does that differ?
First of all, actually, what's the liquidity of the instrument that you are naming? This is quite critical because
BTC to
Sorry?
significant liquidity because CFDs are pretty much just a price exposure.
Yeah,
Right.
as far as I know, there was a on-chain solution for CFDs, and it was called Synthetics token, and essentially it's closed because it didn't kind of get much adoption and it had very low volumes. And I think about Shortbit that it will be highly liquid instrument. We believe that it will be highly liquid with billions of dollars of turnover.
Yeah, because you're like, if you short stocks, you effectively need to borrow the stocks from someone to sell them. Whereas if you're actually shorting a derivative, i.e. a price exposure, you don't necessarily need to do that.
Yes, what we are trying to do, we are trying to exploit the difference between decentralized finance and centralized finance. And decentralized finance offers unique, of course, not replicable in centralized finance world technical features, and we're going to capitalize on such solutions as Chainlink, for example, and effectively the kind of trust in our token is the trust in Chainlink. And we're trying to establish a solution that gets rid of any limitations, unnecessary limitations that limits its adoption. And vice versa, we're trying to capitalize on purely blockchain technologies in this sense to create purely synthetic token.
Okay, so if you're just a question for my understanding. So if you're shorting Bitcoin, do you have to lend the individual to sell, actually lend them Bitcoin, or is it just a price exposure?
No. You're to short Bitcoin with Shortbit, you're just buying Shortbit as a token, as any other token, as for example Matic, let's say. But for some reason, our token, unlike Matic, is always in negative correlation to Bitcoin.
So is that just algorithm then?
Yes. So there are just two things behind this. Behind this technology. Instead of closest comparable to our contract should be probably viewed as leverage tokens, and you're probably aware of such instruments. And they were offered by Binance, KuCoin, Bybit, etc. And by the way, Binance has closed this product line. They closed leverage tokens due to their quite strange features and low demand and low liquidity. And the thing is that such leverage tokens, they were built as kind of in two layers. First layer is collateral structure based on perpetual futures. And the second level is the token itself that robs this collateral. And we got rid of this collateral structure, and we don't have it. And instead, and they had pretty primitive kind of logic. They had essentially no logic behind this token because the token itself just represented this collateral structure. That's it. But collateral were managed in a rather manual way, in an unpredictable way. And moreover, Binance claimed that they are kind of intentionally keeping this rebalancing algorithm hidden from anybody, from observers. Instead, we are getting rid of this two-layer structure, and we are introducing direct token, which has some advanced math behind it to respond to any change in Bitcoin price.
So could I ask a quick question on that? And with it being an ERC20 token, is the smart contract publicly available for review? Is it open sourced?
Yes, we're going to get a number of high-profile audits, and we're going to go through so-called formal verification, which is sort of audit, but more advanced, and it will check the contract logic. And we've got two firms who expressed interest in preparing such a formal verification. And yes, of course, the contracts will be available for public.
Okay. Because that's something that's a little bit different. Two things. First of all, from Binance were, I don't think that their logic was
they had precisely proprietary product with kind of hidden logic, off-chain logic behind it.
And I guess the difference, Snowfall was mentioning about, well, what's the difference between this and a CFD or a contract for difference? It's the very fact that the transaction is presumably on-chain means you've got the transparency and visibility.
Yes.
Whereas with retail-based CFDs, you never quite know what's going on and that kind of thing. But if it's treated as a CFD, I guess there isn't any collateralization, is there? It is that you basically you're putting in a bid on the price difference, not on the actual underlying asset, which I guess is where CFDs came into their own. That's really interesting.
As far as I know, there is a kind of fundamental problem with CFDs, is that CFDs are pretty much will work to some extent if Bitcoin price or underlying price doesn't deviate substantially from kind of some average price. Because, for example, the same synthetics had sort of applicable range for the pricing, something like from $5,000 to $10,000, and you can visit their site and they still have the same parameters. But of course, whenever Bitcoin price goes up quite substantially, it becomes worthless because it's kind of breaking the ceiling, and it becomes because it had to their price had to be reduced to kind of minus area, so it doesn't work. So it's not scalable in terms of kind of long-term usage of such instrument.
Okay. And I guess I saw some challenges with that previously with the products where effectively it's like getting a margin call, whereby, as you say, if it exceeds certain thresholds, the algorithms just said, no, we're not playing anymore on that. But...
Yeah, yes, precisely. Basic reason, we can definitely say that main reason why we are trying to introduce this product is because it's free of liquidation risk. And this is precisely a reason why Binance and Bybit and KuCoin, you can visit respective sites and kind of to see they're saying we're introducing leveraged tokens precisely for this reason, for the reason that these tokens are presumably free of liquidation risk. In my opinion, it's not as kind of straightforward because these tokens, leveraged tokens, they are using perpetual futures as underlying, which are the subject to liquidation risks. And in my opinion, what respective exchanges are doing, they are kind of exchanging this liquidation risk for counterparty risk. They are saying, okay, guys, we will keep this liquidation risk for ourselves, but please trust us that we will pay at any the price that we're stating, that you will be able to claim this full price under any circumstances from us. So this is not liquidation risk, but counterparty risk.
Yep.
Please trust us. And again, in this sense, we're offering different product because we're offering decentralized product.
That's really interesting. So anyone have any other questions or anything? Cecil, I don't know, you're listening very patiently.
What's the name? Sorry, I missed the name of engineer. Yeah?
Yeah, Junior is the development company.
So GENEER, I'm
Right.
guessing as in the background.
What's the product name?
Shortbit.
Shortbit. Okay.
The token, it's ERC20 token. And by the way, we're going, of course, to issue probably some other tokens, whether it will be ETH-bit, short ETH. In my opinion, the kind of the field of hedging is untouched in crypto. It's just untouched, and there is kind of incredible field for development here.
But there is a platform. I didn't understand, or is just a cryptocurrency?
It's a token.
It's the token that will presumably be traded on UniHedge, which is the platform.
Okay, is token launch on which blockchain?
We're targeting Arbitrum 1.
Got it. Okay, how it does. Okay, I'll have a look.
So I guess the other thing you're mentioning counterparty risk and liquidity risk. I guess the other main problem as well is depending on the platform you're running on as well. You may have some system type challenges of volatility, latency, this kind of thing. That's one of the things that concerns me with decentralized exchanges. We have it enough with the main exchanges at the moment that if Bitcoin starts operating a little bit chaotically, all of a sudden you find that all the exchanges are not available and not working. Can we get the same with decentralized exchanges with this?
Let me clarify regarding this UniHedge kind of as a platform. UniHedge as a platform is aiming retail investors, just kind of usual people, because it will just offer just nice and easy with just 2 buttons: buy or sell the token. Probably third button will be stake the token. That's it. So, and it's not aiming. Okay, market makers and institutional investors won't ever use it because it's not necessary. What they will need to use is just smart contracts with direct access to smart contracts. There is no need to use UniHedge for anybody, any one of us. But yes, it would be just nice and friendly, and essentially it replicates Uniswap interfaces. Just buy or sell, and you are using some asset in exchange to buy or sell, to go in or out of the position. So that's it. It's pretty much straightforward, and it's just be sure that the contract itself, that short bid, will doesn't depend on this UniHedge platform in any way, and it will persist and it will survive whatever failure, if it for some reason would happen short bid. UniHedge. So short bid doesn't depend in any way, in an operational way, on UniHedge platform.
So hopefully there's not a potential system problem there. That's good.
Well, UniHedge is just for convenience.
Mm-hmm. Cool.
So if I buy the token, what can I do with the token?
With short bid?
Yeah.
For example, you're a market maker and you're trading Bitcoin. And you've got 1 million invested in Bitcoin just to trade, to get and to produce whatever profits. And Bitcoin, for some reason, gets down by 30%. And while you earned, for example, 10%, so your loss is 20% for respective time interval. Instead of investing of the whole 1 million in Bitcoin, you can invest half of an amount in Bitcoin and half of an amount in short bid, and you will be certain at any point in time that you won't ever incur capital loss. So you will just earn your earnings on Bitcoin trading without any capital loss, because whenever Bitcoin is going down, short bid will go up, and you will get kind of neutral position in this sense. You will get it, and it's up to you whether you will develop a portfolio with 0 delta or with -1 or -2 or +15.
I missed why your token is gonna go up when all the market is going down. Why?
Because it's synthetic, because it's using mass behind it, and yes, there is some kind of innovation.
Need people to buy it.
Okay. We claim following. Okay, no, I'm not in a position to disclose precisely all the information because we are applying for 2 patents right now. And unfortunately, I'm not able to disclose.
Okay, fair enough. I just don't understand how the whole market is going down and how one token can go up. When anything goes up, means there is someone buying somewhere. It doesn't matter what mechanism you have, synthetic or not, or whatever. Yeah, for markets to go down, when markets go down, if there's something going up, it doesn't matter if it's gold or whatever, somebody needs to be buying that asset. It's basic rule of trading, right?
So just to answer that question, it's a short position. So when the markets are going down, the short position is actually getting stronger.
So you're actually buying a futures put option, aren't you?
Okay, fair
Yeah.
enough. But you know, that's the point is you cannot beat the bots in the market. You just don't. You have to have an enormous amount of liquidity. Sorry, let me finish. You have
It's got
to
nothing to
have
do with. It's got
enormous
nothing to do
amount
with
of
the
liquidity.
bots. You're
You have to
buying a
have
short.
sorry,
You're buy-
you have to have an enormous amount of liquidity. So you actually your FA allows you to short at the right time. Because if anybody can short and everybody knows that Bitcoin is going down, everybody's canceling each other. So if you don't have enormous amount of liquidity, you will always lose against these bots. There's no way to survive this. I've been saying this since 2021. Yeah, that's how they operate, and these guys have hundreds of billions behind them. The whole market is being manipulated for a very, very long time. Yeah, so yeah, I understand.
Let me answer your kind of thesis. The thesis, would you agree or disagree that with simple thesis, if Bitcoin goes up, there is right now, is there any consensus between market participants whether they shall buy or sell Bitcoin right now if it goes up?
No,
What will happen in the market? What the percentage of investors will buy probably or sell? And is there any consensus about potential action?
so nobody knows, because if someone knows about that,
No.
they are always
I'm not speaking about somebody. I'm speaking about market as a whole.
how the market reacts if it starts to go up is everybody starts to buy.
Everybody.
Well, not everybody, of course, but
Not
you know
everybody.
what I
Okay,
mean.
not everybody. Okay. Okay. And my message is very simple. There is no preset kind of course of action in respect to whatever behavior of Bitcoin in the market. It's my assumption. And if we are assuming that there is some asset, let's just assume that it's kind of sustainable enough just for a second. And it's sustainable enough and it represents inverse pricing for some reason to Bitcoin. Effectively, there is no consensus about short bid either. There is no consensus. You cannot, under any circumstances, say you need to sell short bid. Never, ever, ever. Because 50% will say sell it, 50% will say buy it. That's my thesis.
But that applies to any asset.
Okay, and the thing is, taking into account this uncertainty, there is no kind of big, let's call it a short bid run. Short bid run, let's call it a situation when everybody, 100% of market participants are going to sell short bid. My thesis is that short bid run is impossible. It's just impossible because short bid is linked to Bitcoin. If you would claim that short bid run is possible, it means that you at the same time is claiming that everybody will buy Bitcoin, but that's not the case.
Yeah. So here's something for you, Alexander. And I really like this conversation because
Okay, but
I always challenge people.
let me answer.
Let me tell you this. Let me just tell
Let me
you.
answer
I
your.
challenge you one thing, okay? Just challenging you one thing. Put the top 50 tokens, remove all the stable coins, and put the top 50 tokens on 50 different screens, yeah? And look at their graph. Okay? Exactly, they all look exactly the same.
Yeah.
Mathematically, that's the probabilities of that happen is close to impossible. Okay, because of what we exactly said. Yeah, you cannot predict. Everybody doesn't buy, everybody doesn't sell at the same time, and all of that. Okay, so what that means is one simple thing. I've spotted this in February 2021. Okay. There are 3 bots running and they have enormous amount of liquidity. So it's all about FA. Okay. And it's not just short term, which means they can move. And why I say this, because by 2017, there was already 17 million Bitcoins minted. Okay. Since then, there was only 2.8 or 2.9. Yeah. So what it means is there's a few people that are in super control of the entire market, and it's simple to do it. I actually spoke about this at a conference. You just create pools of the top 50 coins, and you create pools of 2 or 3 stable coins, and then for every single dollar that is bought of Bitcoin, you buy 2. Yeah, your bots buy 2. So whenever you want to short or long and liquidate the market, it's very simple, because you are connected to every single exchange out there, and you know exactly the positions of everyone at one single point in time. So I can manipulate the market if you have this type of mechanism and these bots, if I have enough liquidity behind me. That means hundreds of billions, okay? Because what you do is very simple. Yeah, if there is a lot of longs at the moment, what I'm going to do, I'm going to sell this 50 pool of my tokens. Yeah, but I short before I do it, right? So I'm killing the entire market. So what I'm trying to tell you is there's no way for you to beat these bots, because they're always going to make whatever money they want in the liquidations. There's no way to control it.
Alexander, I'm going to give you the chance to come back on that.
Let me address this, because it's very important. As I said, I cannot disclose everything at this point in time, but what I can claim, and just you can agree with this claim or disagree, and in the end we will kind of check whether it will work or not. The claim is following: that Shortbit offers such a kind of pricing model that whenever you or your bot will go against this pricing, you will be bust. That's my claim. And you can trust my claim or not, or distrust. And the future will show who is the right.
Yeah, sure. But that's why I'm saying, I love these discussions, because until we actually see it working, we don't know, or the mechanism, I cannot say more. What I'm trying to tell you is what is happening at the moment in the market, and you can do it by yourself. Just put the 50 top coins on a screen.
But JT,
if you can find a way to beat this bot, that's brilliant.
But JT, I'll throw one in, and this will show my lack of mathematics. So Jeremy will pull me up on this. If what we're saying is that we've got a token like Shortbit, which is inversely correlated to the underlying, so f of x equals 1 over x, or whatever the expression is, then that means simply all it's saying is that whenever all the market's going up, then Shortbit's going down, and vice versa. And as long as it's a positive correlation in that respect, a positive negative correlation, then that seems to work. Sorry, Alexander, did I oversimplify it there?
Yeah. The beautiful thing about Shortbit that you don't know what to do with it. Bitcoin is going up. Somebody will say, okay, Shortbit is going down and it's cheap. I will buy it. I will buy it more because it's cheap. But somebody would say, okay, Bitcoin is going up, Shortbit is going down. I will sell. I will, for some reason, I will sell Shortbit just because to kind of to stop my losses. Okay, so it's up to you to decide. It's highly subjective what you will do with both Bitcoin and Shortbit, because they're just interrelated. And yes, there is a big question whether this kind of relationship is sustainable, whether it's proved to protect itself, and to create a token that will probably enter top 20 list with always negative correlation to Bitcoin, with always negative correlation to Bitcoin, the only token in the list of 20.
I've got a
That's-
question. So
Go for it, Cecil.
how comes why wouldn't normal investor or retail investor or like a degen trader just go onto Binance or another exchange just to short Bitcoin, for example? How comes it has to be for short bit? I know you said about negative correlation, but it sounds like from what I'm hearing, short bit is you can short bit or you can long short bit, which is essentially correlated to Bitcoin. So why can a normal investor just go onto another exchange and just short Binance, Bitcoin, sorry, or long Bitcoin?
I'm sorry, are you kind of comparing short bit with some other instruments? What instruments?
No, not other instruments. I'm just saying what is really the major difference between longing Bitcoin and shorting Bitcoin on another exchange instead of actually buying a token such as short bit? I know you said about negative correlation, but it just sounds a bit like shorting and longing.
Are you saying that for the purpose of shorting Bitcoin, you would effectively short it, right?
Yeah, so I just want to understand a bit more because I feel like
my
yeah.
answer is pretty much straightforward. First, by shorting, for example, you would short Bitcoin with wrapped Bitcoin, for example, on, I don't know, whatever lending platform. It means, first of all, that you will need to over-collateralize your transaction first. Second, you will need to pay for this transaction. And you will always be under the risk of liquidation. That's it. That's the answer. We don't have any risk of liquidation first. We don't have any collateral, and you don't have to over-collateralize your transaction, and you will have very low cost of transactions. That's the difference.
Okay, thanks.
It's an interesting proposition. It's one of those fascinating things that when you think about the mechanism and grasp it, it's relatively simple.
Gary, you need somebody for any asset to go up. You need people to buy it.
Correct. And that was the fundamental thing, that ultimately, for anyone who thinks something is worth buying at a particular price, there has to be someone who thinks it's worth selling at that price as well. And
Yeah.
that's where you get the true liquidity risk. Because you might get lots of people who think, oh, this is worth buying, but there's no sellers. But far worse is everyone wants to sell and they can't because there's no buyers.
So people who, let's say there is a mechanism, that is reverse upside down. Okay, Bitcoin goes down, that token goes up.
Mm-hmm.
But the token goes up only if somebody buys.
Okay.
I mean, the liquidity, we talk about liquidity here. This is very simple. If you don't have some liquidity out there that is going to buy the token or remove available supply, then if you remove supply or burn supply or whatever, yes, that increases the value of the token. So you are smiling, so probably I'm getting there somewhere, but there needs to have a mechanism that either you push liquidity to it and the token goes up, or you actually burn the supply and still have to buy. That increases the value.
Okay. The thing is, you are precisely to the point, but on my side, unfortunately, this is a secret part so far. Yes, but your logic is precisely right.
I get that. That's
No,
really interesting.
without liquidity, you can't move anything up or down. Very simple, and the trick is then on the liquidations part, and that's why I challenged you. I challenged you to put the 50 top coins, not stable coins, and you're gonna see it. And then if you have such mechanism, I'm telling you, from what I gave you some clues how you can actually kill those bots. But you need to have such an enormous amount of liquidity, because they can steal, as soon as your token is out, I guarantee you they're going to manipulate it. 100%.
No, no. This is
Oh, I heard that.
pretty
I heard that with Luna as well. No, all of these stable coins, algorithms, anything that is algorithmic can be manipulated. You just need large amounts of liquidity. Anything that is algorithm based, it doesn't matter what it is. Okay.
Let me just kind of bring some idea.
Please don't share what you cannot.
Why do I believe that it will work? The difference between kind of our approach of short bit approach as opposed to kind of conventional this leverage tokens approach by Bitcoin, KuCoin, etc., is rather the difference between kind of old-fashioned USD, US dollar backed with gold, which is collateral, which was the collateral for US dollar, and current modern system when US dollar is not somehow linked or backed by gold. And this is kind of ideological difference. And this is key difference in our scheme. We're free of limitations and we're doing what we want to do with our math, and we do anything that we can to protect the token, to offer, because we're not anyhow bound to any collateral. We're free of any risks and any limitations that collaterals introduce into the system.
I think we're probably going to have to close it off with I'll accept we are free of any collateral risk. I work a lot in the insurance sector, so I don't believe that anything is free of risk. But
I agree.
But that's interesting.
There's one risk in all of these, is that you're doing the coin on Ethereum, and Ethereum can be manipulated.
Yeah. It's a fundamental thing. So, folks, we're kind of out of time. We've spent an hour, in effect, interrogating Alexander, and he stood up to it really well. As JT says, the great
Sorry,
thing
I didn't mean really to agree.
No.
I just interesting in all mechanisms. That's all.
And that's the thing I love about these sessions as well. Like, it gives the opportunity for us to do a bit of a dive into these things and challenge some things. So, Alexander, thank you very much for coming along and standing up to the challenge. As we were saying before, the ultimate test is when we see it in real life and we see how it actually works and once it builds up a history.
But let me once again to invite everybody to participate in the respective tests, kind of pre-production test of the instrument.
Yeah, send the link, please. Can you type the link?
Sure. It will be done in just in some time.
Okay, then come back and share with us, please.
Yeah, come back again. Give us any updates. That's really appreciated. And if you ping me the details as well, I'll add them to the YouTube thing when that comes out. That'd be really good. But folks, thanks very much for coming along. Alexander, thanks for sharing all that info. And Cecil, JT, Jeremy, thanks for coming along as well and asking the questions. Sorry we didn't get to cover anything else. It was a dedicated session, but it was really interesting. Hopefully everyone enjoyed it. For those who are watching online, come and join us next time. With that, we're going to close off. Thanks very much, everybody. Have a great day. Bye for now.
Thank you. Bye.